Clergy taxes. Income tax has made more liars out of American people than golf has. And that's just because it's complicated. I mean, for the most part, it's easy to get in trouble. And so I'm going to focus on the specific challenges facing pastors. Churches have their own set of issues that I'm not really going to touch on, but we can address those at some time offline or later if you run into them. But know that I do work with churches on solving their issues as well, but I'm focusing mainly on the pastor issues. Goals for this session is 1, increase awareness of tax challenges facing clergy. I don't expect you guys to be clergy tax experts after this, but I do want you to be aware of those common pitfalls and challenges that a lot of times trip up pastors. 2, learn some practical tax tips and strategies. Again, I ran these by some of my experienced clergy friends, and they gave me some good pointers. And so that these goals are so that you have more money in your pocket at the end of time. I want you to pay your fair amount of taxes, but not more. I figure that if you take advantage of some of the tax advantages that there are, then it's better for everybody. And 2, spend an appropriate amount of time and energy worrying about tax issues. One thing is, if you make some of the errors that I'm going to talk about, they will end up costing you months and months of time to get it sorted out. Plus, it's just draining to work with the IRS to resolve an issue. IRS is one of the most feared organizations in the world. So anyway, in a nutshell, why are clergy taxes so difficult? And Albert Einstein once said the hardest thing in the world to understand is the income tax. That lets you know something. And clergy taxes are more difficult than income tax. They're not as hard as farm taxes, I don't think, but they are difficult. And they don't teach accountants this. When you sit for the CPA exam or anything else, they don't teach most of these clergy issues or church issues to accounting majors. So question number 1, are pastors employees of the church or self-employed? Self-employed. The answer is yes. You see why this is tough. The IRS has declared that pastors are employees of the church, so you're going to get a W-2 from the church. But the Social Security Administration, so that's your self-employment taxes, consider pastors to be self-employed. And that means you need to file a Schedule SE. And so since you're self-employed, normally if you're a lay employee, the employer would pay 7.65% or half of your Social Security and Medicare. Now, since you are considered self-employed, you end up having to pay both sides of that. So 15.3% of your income needs to be paid into the Social Security Administration for Social Security and Medicare. So this is the crux issue of why it's so complicated to be a pastor, is that there's no agreement here. You have to play by 2 sets of rules. How do pastors make their tax payments? Should it be with payroll withholdings or quarterly payments? Quarterly? And the answer is yes. Actually, for most pastors, they're going to do quarterly estimated payments. That's right. But if you do have a church that does have like lay employees and they're already doing withholdings, it's perfectly fine for a pastor to have withholdings. But you have to tell the church how much to withhold. That's the issue, is you can't use, because they can't withhold for Social Security and Medicare, but they can withhold for income tax. So, but you can withhold enough to cover the income tax as well as the self-employment taxes. And here's the one thing all my clergy colleagues said, emphasize this. You know, you need to, when you get your first paycheck, you need to put in approximately 30% of that paycheck away for taxes. So whether you have the church withhold it or whether you set up a savings account, you should plan on about 30%. I've done with the new rules under the new tax the new tax laws. If you have kids, you might be able to bring that down. I did just some rough estimating, and if you have 2 kids, younger kids under the age of 17, you could maybe withhold, it might be closer to 20% is what you have to put aside. But again, this is kind of new, and we'll see what it ends up being. But that 20 to 30% is what you should be putting aside into savings. And I can't stress that enough. Either having them withhold it or putting it into savings. One thing too, any of you that are being moved by the conference, or you're moving or you're moving yourself, maybe, or you're doing some other moving way, the moving is now no longer, you can no longer exclude that from income. Now that is a taxable event. So if the conference moves you, normally it costs us about $5,000 is what it costs us for a move. And that's to move a whole household, usually over 50 miles or so. But anyway, so $5,000. So that means the taxes on that will be close to $1,500. So that's another thing to try to factor in, is that if you have a conference move, making sure you put aside extra money for to pay the taxes on that move. And again, if you did a U-Haul and had that reimbursed, about 30% of that cost you should be putting aside for taxes. Hopefully that makes sense. Let's see. Can pastors really opt out of Social Security? That's an interesting question. What do you think? And the answer is yes, they can. Question mark. They can. If you, but the thing is, you can't opt out of it just because you think it's a crappy investment. I know that's what Dave Ramsey would say. I think he has it written on his website, is that it's a crappy investment. But is a crappy investment necessarily morally being opposed to a public insurance program? Because that's the criteria. And I know there have been a couple of pastors that have opted out, and I've actually know quite a few that opted out, and later on the IRS will sometimes do this, but they rarely do it. Or not IRS, the Social Security Administration. They'll allow people to opt back in. And I've seen a number of them that opted out initially because they thought, and this is 40 years ago when they went into ministry, they thought that Social Security was going to go bust, and so they opted out. Well, later on they had an opportunity to opt in. So, but that's not something you can count on. They don't do that often. The one thing is, and here's my why would I not opt out of Social Security? First of all, I don't think Social Security, Medicare are going away. I do believe they'll be changed, and I think finally somebody with enough political courage will fix the issues. It's not a difficult issue. I mean, you just got to match up the expected outflow with the expected inflow of money, and then it's fixed. But they need to fix. It'll be changed. It'll likely be changed, but I don't think it'll go away. Number two, if you do opt out, you need to be extremely well disciplined in how you handle your finances. You need to be preparing for retirement. If you get disabled, that's one of those things you don't plan on, but are you prepared if you were disabled? Or are you prepared to help cover your dependents if you die an untimely death? What kind of income will they have? You know, those are the things that you end up losing if you opt out. One other thing is, our UMC benefits for retirement and disability rely on pastors being in Social Security. So if you get disabled, we won't be able to help you, or we won't be able to help with your retiree health when you retire if you opt out. And so really the only way, if you opt out and you want to get back onto Social Security and Medicare, the only way to really do it is to leave ministry, is to opt back in. So I mean, you got to no longer be a pastor if you want to opt back in, or you got to hope that Social Security does again open up allow people to opt back in. But that is very rare that happens. All right, is a parsonage or cash housing allowance taxable or not, is the question. Krista says no. And the answer is yes. It is not taxable for income tax, but it is taxable for Social Security / self-employment. So some of you will have a parsonage, and the parsonage, that will not be included on your W-2. If you are a lay person living in a parsonage, the value of that gets put in on your W-2, but that will not be on your W-2. But then when you go to fill out your Schedule SE for self-employment, you end up having to estimate the fair rental value, and this is very subjective. One thing you could do is look for similar properties to the parsonage that are available for rent within the community you're at, and that might be a comparison. I'm going to say probably most people underestimate this, which I would just visit with your tax professional or visit with somebody like that to get some kind of an estimate on that. Cash housing allowance is different. A cash housing allowance is when they pay you, they don't provide a parsonage, so instead they pay you X amount of money for your housing. And usually it's either included with your paycheck or maybe it's a separate monthly check, but it's usually a regular amount. This shouldn't be like a reimbursement or anything like that. And that then would not be included, that extra payment would not be included on your W-2, but you do have to include it on your Schedule SE when you pay your self-employment taxes. So, all right. One of the clergy comp forms, I'm proud to be paying taxes in the United States. The only thing is, I could be just as proud for half the money. So, one of the best tools that we've worked on over the years is the clergy comp form. This will help you make some of your tax decisions ahead of time, save you thousands. We tried to tie it right with the W-2 so that it's easy for your treasurer or whoever prepares the W-2s for the church to go ahead and use your clergy comp form to go ahead and fill out your W-2 accurately. So I'm going to go through some of these ones. The first one is the designated housing exclusion. And I wonder if I got let me see here. I'm going to get my pen here. But that's right here. Designated housing exclusion. This, if you are a clergy, so this doesn't count for people that are working as lay supply. If you are a clergy, this should never be blank. This should never be blank. Because what this is, so if you live in a parsonage, this covers any of those unreimbursed expenses on your house. And I'm going to go over exactly what counts for those expenses later on, but just anything. But so let's just say you buy Windex. You may not want to have that reimbursed by the church, but guess what? You can write it off for tax purposes because you're maintaining the home with it. So anyway, like I said, I'll cover that later, but that should never be zero. If you have a cash housing allowance, so instead they don't provide a parsonage, but you have a cash housing allowance, this should still never be zero because any expenses up and over your cash housing, what they provide for the cash housing allowance, that you can also write off. And the thing is, it doesn't cost the church any extra money. This does count for an apartment if the church is providing an apartment, Krista asks, or if you are renting an apartment yourself. That when I say they're providing a cash housing allowance, it's just for whatever housing you need. If you are sharing an apartment with a friend or have a campsite down in the middle of nowhere, whatever it is, or if you own your own home and you're paying a mortgage, whatever it happens to be. Let me see. I don't know if I want to touch on this too much, but there's always lawsuits that are attacking that cash housing allowance and whether it should or should not be taxable for income tax purposes. And just to say, you will hear about that, and it may one day be a taxable benefit, the cash housing allowance. So far, they are not they are not challenging the parsonage yet. And by them, there's a group in Wisconsin called the Freedom from Religion Foundation, and they're always trying to make cash housing allowances taxable. I don't know if that's their only goal, but that's one of their primary goals. So one of the things I say too is that this designated housing exclusion, you need to make sure it's on there right away, because this is something you can't set retroactively. So let's just say you forgot about it and it's 0, and then you get to September and you remember about it. Well, guess what? All those expenses from July and August, those ones, you can't include those against your housing expenses. It's just going forward. So when you set that, so if you forget about it in September, it's only those expenses going forward from September through December. So that's one of those tricky things. And the thing is, there's no penalty for going too high. So for example, if I have if I have $1,000 in expenses and I have $5,000 set as my housing exclusion, guess what? There's no penalty. I do end up having to pay taxes on that that extra $4,000, but I'm not penalized. But the other, conversely, let's just say my expenses were $5,000 and I only had $1,000 here. So I only had $1,000 here. Oh man, it's harder to, guess what? All that excess expenses, I can't claim those. So I only get $1,000 worth. So it's one of those cruddy things. Set it high, estimate high. There's no penalty. It's no cost to the church. It's just a straight benefit for you. So oh man, how do I clear that, do you think? There we go. If you are on our health insurance, you'll automatically have a piece coming out for health insurance, which reduces your taxes, but it also reduces the amount you're paid. But the other thing that I would also stress is that if you're on our health insurance, taking advantage of the medical reimbursement account, or if you have young kids that you need childcare, taking care of the dependent care account. Even if it's like, for me, I used to do summer daycare for one of my kids, so I used to have a dependent care account and use that up. This one, again, every dollar you put in there, it's really easy to submit your expenses for reimbursement, and Leanna will talk about that sometime in the future. But the thing is, if you're assuming that 30% of every dollar is taxable, you know what? If I put $2,400 away for medical reimbursement, that reduces my taxes by $800. And some of us, a lot of us have regular. You'll have regular dental, you'll have regular vision, a lot of those things, plus maybe a regular office visit. So those are things that are important to try to take advantage of. But this is one where you don't want to overestimate. This is one where you want to treat it, it's not exactly use it or lose it, but I would treat it kind of like that, in that I would want to estimate conservatively on how much expenses. And then the final one for the clergy comp form is this UMPIP contribution. That's a pension contribution. And, no matter what you do, whether you take it before tax, that reduces your taxes currently, or if you do it after tax with Roth or the after tax one, which reduces your taxes in the future. Probably the more important thing is just that you are putting into this retirement fund. It's nothing but a benefit for you in the future. So, and just as a side note, I was asked this once, could you have your tithe withheld from your paycheck? And yes, you can, but it's after tax. So you can't reduce your pay by just having your tithe taken out ahead of time. So anyway, your taxable, you can't reduce your taxable income by having your tithe deducted, but it's not a bad way to do it. I mean, what I do is my church has electronic donation. So I have it set out to come out of my checking account the same day I get paid. So it's almost like it comes out of my paycheck. So, all right. The next one is winning. Oh, is that a question?
Yeah. So if you are not under the conference's insurance plan, are you still eligible for the medical savings account?
Nope, you are not until you, no, not unless you're part of that. That's I don't know, a benefit included within the health insurance plan itself.
Okay, thank you.
Yep. Oh, okay. Winning at taxes. If you get up early, work late, and pay your taxes, you'll get ahead if you strike oil. This guy was not all that optimistic. But here's just some practical stuff to help you make the best in the best of things. The first thing, just like your accountable reimbursement, is get your treasurer on board. So one of the most practical things is, if you have a copy of your clergy comp form, and we usually email those out to pastors, or you might be able to have a copy after the district superintendent fills it out, give a copy or email a copy to your treasurer and just walk them through it if you need to, but make sure they have a copy. That was always the most annoying thing, and I get the most as a treasurer to know I have to pay my pastor, but I don't know how much. And I don't know how much to withhold. And it just helps you guys all get on the same page. And the next thing is, we do have a lot of resources on our website. We have a guide that shows them how to turn the clergy comp form into the W-2. We have a guide that shows them actually a lot of the stuff we've been talking about, accountable reimbursements, policies, all that kind of stuff. But there's policies that a treasurer might find helpful on our website. So and even telling them to call me or email me is totally an option. I help quite a few treasurers, visit with quite a few of them, or SPRC people, and trying to get this. The best thing you can do is get your treasurer on board, because it can be very isolating for a treasurer. You might be the only United Methodist treasurer for 30 miles. So you don't have anybody else doing exactly what you're doing that but at least there might be a connection either through our website or through us in the office here.
Jeff?
Yes.
This is Jeffrey in Park River. This information that you gave us, is that going to be on the website that we could access it?
It will. And we're actually going to send out an email to you with the links to everything. So. Okay. It'll all be available. It'll be on the website as well as available. And then we're going to also include a couple bonus materials that go into greater detail on some of the more complex subjects. So,
okay.
Yep.
Thanks.
Get a system that works for you. Another thing similar to the accountable reimbursements is you need to set up a system that to capture, especially those receipts and that documentation. And again, I say if you want to use Dropbox or Google and you bring that to your tax account at the end of the year, that's fine. Or if you have a binder of some sort, whatever it happens to be, but it has to be something that you collect the information so that you're not stressing out when it's April and you're trying to find all your your documents you need to file your taxes. So whether it's paper or electronic, you just need to have some kind of a system. And I'm going to show you later, I think it might be the next slide. Here's how I set up my tax folders, and whether you do this again, paper or electronically, there's no problem. I got a folder that's taxes, and then I have a separate folder for each year, a subfolder for each year, and then within that, I have a folder for housing expenses. So anything relating to the house, and again, I'll talk about that a little bit in detail later on. Anything that's relating to the housing expenses, I throw in there. Anything relating to funerals and weddings, because those won't usually be recorded on your W-2. So if you go and do a wedding or a funeral, a lot of times you'll get a check either cut directly from the family or from the funeral home. So, and even tracking mileage that maybe is not reimbursed going to the funeral home or to wherever the wedding location is, that's one of those things. If you have any extra expenses that aren't reimbursed for that. All those tax documents, as well as what tax payments you've made. If you're not doing withholding, I would keep track of your quarterly estimated payments. And then any tax documents such as W-2s and 1099s, have a folder for that. Any unreimbursed expenses, because again, those are still, you can still write those off for self-employment purposes, even though they're not excludable for income tax purposes. And then the last one I always have is a miscellaneous one, because there might be some stuff, I don't know, does this affect me tax-wise? Put it in your miscellaneous folder. Let your tax preparer figure it out. They're used to this, and then they can help you say, oh, that one should really go in this folder or whatever it is. But it's not a bad idea. Just, it's better to collect more information than you need, and then end up paying too much in taxes because you didn't collect the right information. And then I'd set up a complimentary one for the next year after that eventually. So the housing expenses, this is the housing expenses digression. I have compiled this from various lists from various trusted sources over the years. So these are those expenses that are not paid for by the church or reimbursed by the church. So if you own your own home, it's important that the down payment on the home would count, the mortgage payments, principal and interest. So this is one where you might end up being able to double dip if you're able to itemize. If you have real estate taxes and mortgage interest, and you might be able to also itemize as well as exclude this from your income tax. Property insurance, rent payments, utilities, all these basic utilities. Long distance phone service wouldn't count. I don't think cell phone service counts either. Maybe if it is your home phone, maybe it counts. They usually have a separate kind of package for that. Homeowners association dues, renters insurance. If you are in a parsonage, you should have renters insurance. That's what protects your stuff. So, and it's usually very, very cheap. Furnishings and appliances. This is the big one. So some of you guys will be moving into a parsonage or moving into a new place. And there's always, whenever I've moved, it ends up I buy extra furnishings for the stuff, or I end up having to maybe buy an appliance or something like that, or all that kind of stuff. So if I'm going from a 1-bedroom house to a 2-bedroom house, so I need an extra bed and furnishings and stuff like that, all that stuff can be written off for income tax purposes. So that's one of those things you got to keep in mind. So that's why I always want to be high on this. Decorations, curtains, blinds, wall hangings, all that stuff you can write off. Any repairs. Oh, I'm going to look at Krista's here real quick. So keeping a record of this allows you to offset income at tax time. It allows you to offset income for income tax purposes, not for self-employment taxes. So that's what this is for. It reduces your income tax and not your self-employment tax. Any repairs. Sometimes, you know what? It's easy, instead of waiting on the trustees if you live in a parsonage, sometimes it's nice to just do something real quick. Like, let's say you wanted painting and they just give you the go ahead. If you buy the paint, you go ahead for it. You know what? Go ahead and do that if they allow you to do it. That's not uncommon. Or you got minor maintenance such as a door jamb isn't working quite right, so you fix it or something like that. All those things that you might do that might not be reimbursed. Yard maintenance and improvements, planting flowers, stuff like that, or mowing lawn. And then all these maintenance items, pest control. So, many of us might not think about buying, if you buy ant traps, for example, yeah, you can write that off for tax purposes. Light bulbs, household cleaners, pine sol, stuff like that. Anything you're doing that helps keep the house or the home in proper working condition. So there's a lot of stuff. So this is one of those areas where you might as well, anything that you think might be included, go ahead and put it in that folder. So the next one I want to cover is this. get a system that works for you. If you are going to do quarterly estimated payments, you need to put that on a calendar. And you need to, so it's September 15th, January 15th, April 15th, June 15th. Whether it's a reminder on your smartphone or on your Outlook or whatever it is, or you got sticky notes, or you got a physical calendar, get this on your calendar, because you don't want this to sneak up on you, and you definitely don't want to pass it by you. If you're making quarterly payments, again, you can go to then www.irs.gov/payment/direct pay, and that's where you can pay it online, or you can actually send in a paper coupon into the IRS as well if you need to. The one thing you'll notice is that there's April 15th. That is when your first quarter estimated payment is due, but it's also when your final payment is due for your prior year taxes. So this might be one, if you ended up underpaying your quarterly estimated payments, this might end up being a huge one. So make sure you're prepared for that as well. If you end up, that's why it's important to do that 30%. I mean, I would rather have a small refund than have to all of a sudden scrounge up a lot of thousands of extra dollars at tax time. Let me see. That's the important thing, is make sure you got those in mind. And that, again, with every paycheck, either having it withheld or putting it into some kind of savings account is the best thing you can do.
So, Jeff,
yep.
Just a little clarification. If you have your treasurer withhold like 30%,
yep,
then you don't have to send in.
That's right. Then you don't have to worry about these. Then your treasurer has to worry about setting it in, but the treasurer is trained to do that. They'll send it in every single month. So,
okay.
Yep. That's why I think that's the best way to do it, because honestly, unless you want to complain about the IRS every 3 months, then to do a quarterly estimated payment. But if your treasurer can do that for you, it's a relief. So the other thing I say is get a tax professional. These are 6 people that I know personally that I trust to handle clergy, United Methodist clergy income tax properly. I send them email updates every now and then to make sure that we're all on the same page. And when there's an update that goes out, some of these, oops, shoot, I went the wrong way. Some of these, like MARILYN PERRY, Jim Brown, I know for sure that they will do them they'll use Skype to do it. So if you're not by them, they're more than happy to connect with you electronically. And some of us that go to the Twin Cities, we might end up going through Anoka or by Anoka, and we can stop by. I know Maryland has that happen sometimes too. But this first year, especially if you've never done clergy taxes before, I would strongly encourage you to seek out a professional that knows clergy taxes. Sometimes you can go to a regular CPA, and again, they don't teach this stuff. I talked to a tax professional that mostly does farm taxes, and he called me up and he says, I don't know this stuff, walk me through it. Yeah, and I did, and I'm more than happy to do that. But again, it's much more comfortable for them if you just go to somebody that has experience here. And you might see, at least Maryland will be at our annual conference. We're in Sioux Falls this year for annual conference, so that's Connie Buskell's. Anyway, these are people that, like I said, I trust. Any other questions?